I just didn't even really put 2 weeks in. I was like, hey, I think I'm done. And I just went into my office and told my boss, I was like, this isn't for me anymore.
What is different about the way you do things for your properties versus the ones you manage?
I typically tell clients, hey, if you're not willing to give us 6 months on the short-term side to go up and down on things, we shouldn't be working together because there's going to be shit that happens.
On an ongoing basis, what is it that you guys do that most people you think are not doing when it comes to building that relationship that feels like a true partnership and not just like a vendor relationship?
Your job is to be working on the business, not in the business. That's why you hire employees to help you do that. The reason why companies fail is it's not because they can't make money, it's because they stop trying to figure it out.
All right, welcome everyone to the Hospitality Edge podcast, where we bring together what we think are two sides of the same coin, real estate and hospitality. And we bring in here operators, investors, entrepreneurs, and leaders to tell us about their stories, their lessons, the mistakes they've made so that you don't have to repeat those same mistakes. And today I'm super excited to have Nic Morales, the managing partner at RealTreo, with us. Thank you so much, Nic, for taking the time to be here.
Yeah, thanks, Sebastian. I appreciate it, man. Excited.
Awesome. So why don't we start with just you telling us a little bit more about your background? You have a big portfolio of properties you own and some you manage, but how did you get started? Entrepreneurship, real estate.
Yeah.
Just tell us a little bit about your background.
Yeah, I think the best place to start with that is I look back on, I worked corporates. I worked in the National Football League, which is obviously American football in the United States. I worked for 3 teams, and you get to, I got a great start into learning sales and learning kind of that whole idea from learning how to sell things at a very young age. I was 21 out of college, university, working with the Miami Dolphins, and really get to understand like how business works, right? So my background is maybe a little bit different than ours. Like I had a pretty good job. It was a fun job. Like I got to go to sporting events all the time and be involved in that world, entertainment, which was great. But I did that for about 3 years, and I hopped around. I started with the Dolphins in Miami, then moved to the Raiders in Vegas. And around time when I was with the Raiders in Vegas, I got to a place where I just felt like I wanted to do my own thing. I was like, I think I can do this on my own. Talking to a lot of other owners of a lot of different businesses, because I was selling corporations and small businesses and medium-sized businesses, and just kind of hearing their stories. And the common thread I found with all their stories was they just kind of had the gumption and the balls to just do it on their own. They just decided, hey, I'm just going to try this and make it work and go for it. And so, yeah, I was working for the 49ers at the time. I was having some family stuff go on, and I just wanted to be closer and have, at the time, I didn't realize, but it was more so I wanted to have more freedom. I wanted to be able to have freedom to create what I wanted. And not to say that I didn't feel like that when I was working corporate, but I definitely was working for a corporation. They're making money off of you, right? Like, and as a salesperson, you create massive value, but you don't get to really harness any of that equity. You're really in a place where you harness the cash payout and you get paid well. And so I was just in a place where I thought this would be the time. I was 24 and it was 2019. I'll never forget, it was August of 2019. And I just didn't even really put 2 weeks in. I was like, hey, I think I'm done. And I just went into my office and told my boss, I was like, this isn't for me anymore. And I learned about wholesaling and real estate through a family member of mine that was doing some wholesaling. And I was like, this seems doable. I think I could do this, like getting things in contract and selling the contract. And so I got a subscription to PropStream at the time for $50 or whatever it was back then. And then started pulling lists and quit my job and just moved back home to Northern Nevada, where I'm from, and started my company and started wholesaling. And that's really kind of how the start happened for me, was really learning real estate from that side, is like what a deal looks like and why. I think it's a great place to start for a lot of people, like wholesaling, and because you get to understand what deals are, because you look at them and say, okay, well, what's the value of why someone else would be wanting to buy this? And this was like pre-COVID. This was pre-COVID, where before interest rates were really low and like people were buying anything, right? Like the deals still had to make sense, kind of like where we're at now with the real estate market. Interest rates are higher. Obviously, it's a little bit different, but the market's got more realistic now, where people aren't just buying anything because it's cheap to buy. When I say cheap, the debt's cheap, right? Especially in the United States, where you have leverage that you can use it just was a good place for me to learn and kind of do deals and understand what that looked like and be on the phone a lot. So I was making a lot of cold calls. At the time, I was doing a lot of texting when texting was very prevalent in wholesaling. I was sending a couple thousand messages a day and responding back and working every single deal that was coming across. And so, that's really how I got my start was I just wanted to be able to do my own thing. I wanted to be able to create and you talk to anybody who has really any significant amount of wealth and time, a lot of them have assets in real estate. Some of them have assets where they built a company or they have a lot of stocks, but a lot of people, the biggest wealth generator in the United States is still real estate. It's a place where you can come in and make a big splash relatively quickly if you just work hard and you put it together. So that's kind of my start and how I got to where I'm at now. And I mean, there's obviously a big chunk in the middle there.
Yeah. A lot for us to unpack, but that gives an idea. And I like to zoom in on that transition point in your life where you were working corporate, you were probably comfortable, probably enjoying it, but something in you felt like you wanted more freedom, you wanted to have equity and not just be working for the cash, right? How was that decision for you? Like, was it a no-brainer? You knew it, you were done, and you, that's why you didn't even give the 2 weeks. Was there a lot of thought process and mental preparation that had to come in prior to taking that decision? I'm just curious how you went about taking that decision.
Yeah, I think like I'm pretty much I call myself a jump in the pool type of guy. No matter if there's water in it, I jump first before looking. And so I wouldn't recommend it to a lot of people just to jump in. Obviously, I was in a position of my life where I was relatively young. If I did fail, I could go back to work, and even now I could go back to work. It's not something that is that big of a deal. But I just figured it was the right time. Like I didn't have a lot of commitments as far as like family or any of that stuff, as far as wife, children. So I figured if I'm going to do it, now's the time. Like, and especially in America, we get this thing that where you're going to miss out on these opportunities and these corporate promotions and all that. And ultimately, like, you're a number to them. They don't care. They're going to run you until they stop running you, especially in sales, until you stop running, because you're a profit item, a profit center for them. So for me, it was pretty easy decision, just because I figured I didn't really have much to lose. And my personality is like, well, nothing lost, nothing gained. Like, it's not that big of a deal regardless. Like if I go do it, at least I learned something, at least I tried to flex that muscle. And if it's not for me, at least I know. But if I'm always going to have that idea in the back of my mind of like, well, maybe I could have done it, or I could have done it and I just didn't want to do it, then I would have just lived the rest of my life being more frustrated. Yeah. So I think for me, that decision was a relatively easy one. And I think a lot of people are looking for like the stars to align. Like, I need enough money and I need the LLC set up, or I need my website. And like, in my opinion, and what I've learned, and this is advice that I got when I first started, like, I remember a guy telling me, he's like, Nick, nothing's going to be perfect. You're never going to have enough money. You're never going to be ready. You just got to go do it. And that's part of being an entrepreneur, a true entrepreneur. A lot of people put that on their bios that they're an entrepreneur. But ultimately, like, you're moving away from the time-based economy and trading your time for money. And you're saying, hey, like, I'm going to work in the opportunity zone where if I don't work today, I'm not going to make any money, but okay, if I work 1 hour and I make money, then that's opportunity based. So I think it's a different type of a mindset. And in America, I think a lot of people just are in a place mentally where they're so afraid of that concept, because we've been taught our whole lives to have a comfortable job, go to college, get a good job, put in your 401k, save till you're 55, and which are great things. And there's nothing wrong with that. I have a lot of friends that do that and they're high earners and like they're executives and they do great, but it wasn't for me. I just knew that I wanted to go kind of go get lost a little bit and have fun and figure out what was for me. And like we talked about before we even got on this call, like, what I was doing then is not what I'm doing now. It's not even close to what I'm doing now. And like, that's the thing, is like, I could wake up today and be like, hey, we're done with the short-term stuff. Like, I don't really want to do that anymore. Like, we had a good run. We learned a lot, and let's figure out how to get better and go a different way. And those are things that, like, I don't think any schooling can teach you around entrepreneurship, because it just, as I call it, the school of hard knocks. You got to go through it, and It's an experience. And so for me, it was, yeah, like to answer your question, it was just something that I figured was another added tool in my tool belt. And I felt I was going to be in a place where always people were going to perceive me as being just a sales guy, just a guy who could sell stuff. And it's frustrating to be put in that box when you want to do other things, but they're telling you, hey, you can only do this because that's how you produce money for us. And that was probably a very big frustrating thing for me in the NFL when I was working there, was that, which is understandable. Like, I get it. Like, as an operator and owner of a company now, like, you want people to kind of stay where they're at because there's a value to them on revenue wise, right? And so, especially in sales, it's even higher than that. So, but yeah, it was a pretty quick decision for me. I don't make decisions. I don't let them take too long. I just say, if that's what I want to do, let's just go do it. We'll figure it
I love
out.
it. And you just jump into the pool, and so okay. And how do you go from wholesaling that you had in mind originally to where you're at now, owning so many properties, long-term rental properties, short-term rental properties, managing short-term rental properties? Like, how did you pivot to where you
Yeah.
are now?
Yeah, I think to talk on that, I think the best thing that I could start on is like, is your partners. I think it's a very important. A lot of people, as you get started in your business, they don't like to partner because they're like, well, I'm losing the pie, right? I'm losing a piece of the pie. Well, very early on, I figured, hey, the way for me to get through these ranks faster is by getting knowledge faster, right? So how do I get knowledge faster? Well, I partner with more people. And so I partnered with my two principal partners that are still with us at RealTreo. They're more in advisory roles now, but they were very pivotal to my learning in the beginning. We were equal partners, and one handled the construction, one handled the financing, and I was the sales guy that brought in the deals. And they really taught me as a young man and as a young person how to learn how to do real estate from all cycles of the business, how to actually buy them, how to flip it, how to make money. And it allowed me like a playground in an essence to play on the jungle gym and fall and be like, okay, it's okay if I fall because I have other people here that are going to help me get back up. Right. And so I think I obviously partnering was the biggest piece of my career that took me to continue to take me to that next level. It's because I'm only as good as what I know. Right. And if I have more knowledge, like, I don't care that I own a smaller piece if that allows me to then get more than what I would have probably gotten if it was just me or took me longer, right? So I partnered with two partners down in Las Vegas. We started flipping a lot of homes. Instead of wholesaling them, we were buying them ourselves, doing the work, fixing them with contractors. So I got to learn some of that there, but not much. I was still focused on the sales side. And then my partners are in their 60s at the time, late 50s, early 60s now. And they just kept telling me, Nick, like, we could sell these, right? And we're gonna make a lot of money, but ultimately, like, that's a job, right? Like, you sell assets like that, you just keep turning them. It's just a constant flip, right? And there's a lot of guys out there and girls out there that make a lot of money flipping, but I was more so concerned about asset creation. Like, I wanted to be able to create something that there's no real ever true form of mailbox money in real estate. Real estate is the most impassive thing that there is, or passive thing that there is. Everyone always says real estate is passive, and I just laugh. I'm like, it's hard work. Let's get that stuff to work. And so they shifted my mindset to say, okay, hey, let's take some of the money on the wholesale deals that we don't like, and we'll buy the ones that we do, and we'll build a portfolio. So it started out with one rental, and then it started to two rentals, and then we're buying a duplex, and then we're buying three plexes, and then we're buying a fourplex. And now it's to the place now where we're looking and purchasing 30 unit buildings at a time. And so that was my kind of stepstones into that. And so by doing that, right, like, you've upgraded the volume of business, but now you got to upgrade your system. So it took me years to really, the last 2 years, the most part, I've been becoming an asset manager to understand, okay, what do we need in place to be able to manage those assets? So instead of hiring property managers, we did it internally, because I was like, well, I don't want to hire that out because I want to learn it, because it's important for us to know and really control that from the short-term rental side as well as the long-term side. And so that's kind of the transition that it took us, and to where now we kind of self-attract clients, because clients will come to us because they've done business with us, or they know that we're in that space, and they understand that we understand the full cycle of the business, from the acquiring all the way down to the construction, to the management, to the selling, because that's what I've been doing for over 5 years now. So, and that's kind of quickly, that's the quick version of how we got to
Yeah.
where we're at now, where we have a team and that are running all of our assets and managing them. And we're still relatively a small company. We're not a massive company. I mean, we've got about 77 long-term units, and they've got about another 18 or so on the short-term side out of that. And then we have probably another 30 or something short-term rental management units that we manage. And then we manage some other units as well. We're onboarding probably about another 150 on the long-term side for clients that are friends of ours that we know. So that's kind of how the combination of the business has gotten to that place. And so now I don't do any wholesaling because it's not really worth my time in the sense where I could just buy that asset. And even if I got to pay them 30, 45, $60,000, it's worth it if the asset produces, because at this point, I'm more concerned about asset creation and creating a company that does that rather than the turning of flipping and all that. Because the flipping it's a lot of work. It's a lot of work, and you're doing all that work to value create, and then you're just getting rid of it right away. You're not really getting to extract that full value over a 5 to 7, 10-year period of time.
And if we break down, there's a couple things I want to break down there. First of all is we go back to where you started, which is, hey, have partners and leverage the power of partnerships, because they're going to teach you what you don't know, and even what you don't know, right? How
Correct.
did you go about, when you were starting out, how did you go about finding those partners? Because I feel like from what you were saying, like you were in a position where you had a lot to offer time wise on the sales side of things. I mean, you were bringing the deals. That's a big thing to bring to the table. But at the same time, there was the whole, you mentioned, financing side as well as the construction side, where you were the one learning, right? So how did you go about getting those partners to be willing to jump into this with you?
Yeah, I think it's a great question. Listen, if you can provide value, the thing that I had as a young person is I had time. Like I was willing to go do the extra mile stuff that was technically maybe out of my scope of Nick's just a sales guy. And I did that for years, where I was doing construction. I was on these jobs doing those things. But to answer the question on how I found them, I think people don't realize how much help is around them. And I was very lucky in the fact that the guys that I found in the beginning were the right guys. And has the relationship changed? Of course, like it's changed to where it's different now, our relationship as far as partners. But in that time that I needed them, they kind of just found me. It was a small world where I was doing all wholesale deals, selling to flippers, and they were getting loans from my now partner. And that guy my partner was like, hey, who's getting you these deals? And they're like, oh, so-and-so's getting these deals. And I was making 20, 30,000 a wholesale on average. I was making about 20, 30,000 on wholesale on average on those ones. And they're still making $40,000, $50,000 on the flip. So there's a big margin there. So I kind of had that value already created for me, where I was like, well, look what he's doing. Imagine if he could get that whole pie, we could all work together on that. Right. So then I got to learn. Right. So that's how that ended up for me on that side. So how I found them.
I think the takeaway is like to your point, right? You always have something to add. Even if you don't have anything to add, you have time and you have your willingness to do the work, and that's worth something. So start with what you have and add value, and the right partnerships should come. Now, when does the short-term rental and vacation rental aspect become a thing? How did you get into that?
Yeah, so short-term rentals came from something of like when we were buying these assets, right? Like I was at that time, we were strictly just doing long-term, right? Like I was putting them on Zillow, like I was managing them myself for the most part. We had about like 10 doors at the time that we were managing. And I had somebody reach out to me on Zillow, like this is like 2020, like December of 2020. So we've already kind of gone around that whole year going into 2021. And somebody said, hey, would you mind if I rented your unit to do arbitrage? And I was like, okay, well, hold on. If they're going to do arbitrage, obviously there's going to be a place for them to make money. Like I should really look into that. And that's where our first Airbnb started. And we started doing that one, and then we did another, and then we did quite a few more after that. And then the management piece came from the fact that I was already doing it for my business, and people around us wanted me to do it for them. And then it just started going one from there. And then then we started getting larger clients who were like, hey, do you want to take on this whole apartment building or this whole motel that's been converted to do those? And that's kind of how that superseded relatively quickly, which all happened within probably about a year's point of time. I've been doing Airbnb at that point for over 2 years on my own, just doing all my properties. And then it became where people were coming to us and myself to help them do it. And at that point, I already had a very simplistic team in place that was helping me manage everything because it was getting to a place where I couldn't. And we were probably driving about 30,000 a month in gross revenue on the short-term side, probably another 20,000 on like the rent side of the long-term. And like, so we were at a place where like, it was enough for me still to be involved, but like I was definitely heavily involved, but I still had a team. And then over the last year and a half, it's really started to explode where we had clients come to us where we have to kind of turn them down because it's either something that doesn't really make sense for us or the property really doesn't make money. And our whole thing as operators is like, I'm not a short-term rental manager who just short-term rental manages. I also own assets. So our whole thing is like, if somebody wants to come let us manage their property, we want to make sure that they're going to have a good experience financially, right? That our number is going to be covered by us coming in, making the gross revenue higher. So that way they can pay us. But also the bigger thing is that they would be interested in wanting to invest with us on other properties down the line, because that's ultimately our biggest piece is that we're looking for capital and more money to go do more deals, right? And so if we can give them a positive experience saying, hey, look at how good they did on this, I should possibly look at doing other stuff with them because they're already doing, they're doing the long-term and they're doing the short-term side. They're full circle when it comes to the asset management and the ownership of these properties. So.
I love it. Yeah. So basically using, like seeing your owners when you're a management company as, yes, your clients currently, but also your potential future partners or capital partners in real estate deals.
Yeah, they're partners, right? Your best market, like our thing is, we always say our best marketing is the clients that we already have, right? Like most people are trying to spend so much money to go out and acquire new clients, but if they just focus on the clients that they have to give them such a great experience that it vibrates to other clients very quickly because they all, as like people that own property, right? Like they know people that own other property. That's just how everyone kind of fly together, right? They always hang out together. So if you're doing that great of a job, and all the business that we've got on, pretty much 90% of the new business that we've gotten has all been referral. Very few of our business has been we paid to get in contact with that person. It's been, hey, so-and-so heard of you from this person, would you be interested in helping them? And our whole thing is that we want to make sure that their experience is going to be we're not looking to be the largest short-term rental manager. Like we're continuing to acquire assets. And so the short-term rental side, number one, is for us to attract investors who want to come in. But number two, it's to help pay for the staff that's there to not only manage those units, but also manage my units. So we have a cost neutral. We're actually making money on managing my own stuff. Right. So, and so most companies do it a little bit reverse where they're a short-term rental arbitrager or manager, and then they start buying because they have a lot of cash coming in. But we were already doing that, owning assets before, and the management piece just became a profit center because it was like, well, we should make the money here because look at how well we do it for ourselves. Like we have ownership, and the fact that our team doesn't just work for them, they also work for us on our assets. So we know that they're higher and better trained, which allows us to charge what we charge on the management side. So.
Yeah, no, and I think for property managers that might be listening to this, I mean, what you just said about retention and just the power of, I mean, the power of referrals and the power of giving a good experience. There's this thought experiment that I heard somewhere or I read somewhere, and it's basically like, imagine that you can no longer advertise, you can no longer run ads, you can no longer post content, you can no longer go and get clients through cold calling. None of that is gone. The only way you can get new clients is through referrals. Now, if that's the case and you lose all your clients and you have one client left, how would you treat that client, right? So it's this thought experiment of like, well, however you would treat that client and whatever you would do for that client, well, that's how you need to treat all of your clients, because they're going to be, at the end of the day, your source of growth. And I would add to that the fact that there's some level of churn that's natural. There's some level of like losing owners that managers go through. That's natural, organic.
Yeah.
Just people sell their properties or whatever it might be. Some people would just want to have the fixed income of long-term rentals. So unless you're countering that natural churn rate with something, well, which that something can be the referrals that your clients give you, then really whatever you might be adding through your sales efforts or whatnot is not helping you grow. It's just helping you cover
Same.
the loss.
Yeah,
Stay still.
it's the same. Yeah, yeah. And I think if you look at if you do referral marketing correctly, right, and you do it with the basis of what we just spoke about, which is you want them to have a great experience and that they see value beyond that you're just making them money. They look at you as a confidant in that space. And a lot of managers struggle with that because they're not really in that space. They're just managing the asset. Like they don't understand on the base level what an owner's stress goes through, because I have mortgages. I have a lot of mortgages on all these properties. Like I understand that doing trust accounting or things of that nature is detrimental to that owner because I need cash in faster because I got other bills to pay, right? And so there's just a lot of things. And I think also when you look at a client, right, like you have these big firms like Vacasa and Evolve, right, like that are massive and they do an awesome job, but they're not going to give that customer experience to most people, and they're going to have higher churn, right? And it's partly because they're just a large manager. Like that's what they do. They just manage. They probably own stuff as well. I don't really know much about their business, but I can tell you that like when clients come to us, the first thing we say to them is like, hey, like I want you to understand I'm doing this not because I want to do this for your property and make money, but I want you to see how good of managers we are, and I want you to feel good about paying me. Because that way, when you leave here, you'll be interested in wanting to invest with me and you'll tell your friends about me. And that's how we've gotten all of our business is because these people, ultimately, we're going to make mistakes as a manager. We're going to make mistakes owning property. But if you have investors who understand you, they understand your business and they understand what you're doing because you've communicated at a high level and you have a good reputation with them, they're willing to give you a little bit more give and take than other clients. Like most of our clients, like will never leave us unless they sell the buildings because they have no reason. We make it so easy for them. They don't do anything. We take care of it all. It's all hands off for them, and they make money and they get to enjoy their asset the way that they bought it, which is most people don't want to do what we do. They don't want to buy it and do all the work. They just want to buy it and make money. But that's not reality, right? Like you can't do everything in real estate. I always tell people like there's two options. You get to do what I do every day and be in it all day with my partners and my team, or you get to have a lot of money and you get to give it to a guy like me. That's how it works. And so it's very seldomly do you find owners that are also the operator. It's not really like that in a lot of spaces. Even in the larger multifamily space, these syndicators are familiar with that. They're raising capital and they have no clue how to do construction. They just hire somebody. They have no clue how to do property management, like really do it and really understand how to move the needle, that when you have a larger building or larger units, it moves that needle across all of those, right? And so I think the real estate space will be very interesting in the next couple of years because you're going to see a lot of those companies no longer have clients, or they're going to change because clients are looking for a better customer experience overall. Like they would rather shop for the smaller firm than go to a guy who has 2,000, 5,000, 10,000 units under management, because they're not able to give them that same level of understanding. And ultimately, like I said earlier, like our goal is not to be the largest short-term rental manager. I don't know if if we'll get to 100, I would be like, hey, we're good. Like we don't need to, like our goal is to buy more assets, continue to acquire and buy more and do that. We turn a lot of clients away just based off the fact that like, is it worth it for us to make $200 a month off of an asset? That does this client really have the capacity to want to come work with us on our stuff? And then also, is it in a market where we're stressing our team too much, where it doesn't really make sense? Like it's just to make $2,400 a year is not really worth our time value conversation. So,
and I'm curious, what is different? Like as someone that manages other people's properties, but also your own, the ones that you guys own, right? What is different about the way you do things for, let's say, your properties versus the ones you manage? Like, is there anything like? And I'm just saying,
it's all the same.
in the
It's all the
sense that, like, for example, revenue management wise, I'm just giving that as an example. Like,
Yeah.
there are certain things, there's certain decisions that you cannot make as the property manager, that you have to sort of rely on the owner sort of sometimes giving you the green light to make certain renovations or whatnot, or sometimes we hear a lot those owners that set minimum rates and then they don't give the pricing flexibility required to perform to the property manager.
Yeah.
So like, is the fact that you own the asset, does that give you an edge as far as like, okay, well, I know my fixed costs, I know my variable costs, I can have more granularity in terms of the analysis of how you do pricing, for example? Like, just curious to hear
Yeah.
your thoughts on that.
Yeah, that's a great question. To answer the first part, like we do nothing different. Like it's the same
Okay.
thing. We ask that we manage them the exact same way if they were my babies. Like I always say, assets are like your children, right? You put a shirt on and you watch them grow and they get big and strong and then they make money, right? But it takes time. And I think the biggest thing is like I think what you're saying is like, do they give you more leeway and do they trust you more? And and that's why I'm hearing you. They allow you to make the decisions. So I don't take clients on that don't allow us that flexibility. Like it's something that my partner and I have said, hey, listen, if we have a client who is going to be really hands-on, and hands-on's fine, but it's something that where they're not allowing us to make the decisions that is best for the asset, then we're probably not the fit for you because I don't have time to give you every understanding of like why we're pricing it this way and why we're doing these things this way, because that's what you're paying me for. Do you pay the plumber $200 to come in? Like there's always that saying in the US, I don't know if you're familiar with this expression, but they go, plumber came over, fixed your sink, right? It took him 5 minutes, you pay him $200. One owner gets pissed off because they're like, well, it only took 5 minutes. Why are you charging me $200? Because that plumber has spent 10 years learning that that's the problem. Right. And so it's no different than on our level. Like my team and I have spent 5, almost 6 years now, knowing where you're going to have a problem and what's going to be the problem. And if you don't want us to work with you, and I think that's why the conversation in the beginning is, I always try to go with the holistic approach of like, hey, like if you're not looking for someone to be a partner with you on this property, then we probably shouldn't be working together, because a partnership relationship is different than me being your vendor. You're allowing me to make these decisions because you trust the fact that I know the answers because I've been doing it longer than you and at that level longer than you, right? And even you look at some of these older property managers, right? Even if you look at like some of these older guys that have been owning assets for a long time, and women, right? They've been doing it since the 80s or 90s, right? Like they're so far behind the curve on technology that it's just like curbing them to make sure that they understand, like, hey, you're in it all day. You're doing it now with the new version. You have to have that trust, just like you're going to have that trust that they're going to allow you to perform. I typically tell clients, hey, if you're not willing to give us 6 months on the short-term rental side, yeah, to go up and down on things, then we shouldn't be working together, because there's going to be shit that happens. I can't predict everything. Like I can tell you what I think the revenue is going to look like, but anybody can do that. But how are we going to get it to that level and make it sustain? You got to be patient, and you got to be willing to try it out to see if it's actually going to work. And so I think that's where having it where I own my own assets and our company owns our own assets. Like I've been there. I know how you feel. I know you're nervous, and like, but if you don't trust me, then we shouldn't work together. We shouldn't be doing this down that route. So, but typically, like I don't see it being that big of a problem. Like our clients, we had one client recently who's left us, who like we probably should not have taken on. We knew it was going to be a headache, and like she left us. She left us within a month, and I don't sign anybody to year agreements. I tell them, hey, if you want to fire me in a month because you don't feel valued, then that's fine. I understand that. That's up to you. Just pay me what I'm owed, and we're on to the next. I have no reason to lock you in for a year deal or a 6-month deal. Like if you're not willing to trust me, like I'm going to trust you, then we probably shouldn't be doing business together.
And that's key. Those original conversations to set the right expectations. I mean, one thing you mentioned there, the 6-month rule is great. I mean, like give me 6 months. Don't measure results based on a reservation per reservation basis. Measure success based on the gross numbers that we can achieve at the end of this period here. That all makes a lot of sense. Now, what about on the ongoing basis of that relationship? Because you can do all this part of setting the right expectations, and like there needs to be trust, and that is the upfront conversation that takes place. But what are you guys doing differently on the ongoing side of the relationship for them to, because you were saying like one of the things we do is we go the extra mile because we want them to see that we're not just a vendor. Like we want them
Yeah.
to see us as a partner. So on an ongoing basis, what is it that you guys do that most people you think are not doing, or you think most people should be doing when it comes to building that relationship that feels like a true partnership and not just like a vendor relationship?
Yeah. Yeah, I think that goes back to being more of an advisory role. Like our job is to advise them on those things. So like on a monthly basis, we're giving our owners, which I'm sure like your firm that you're working with, like is doing something similar. Like I think more than a month is too much. Like to talk to a client weekly, I think it's way too much. Like I got a job to do, so do they. And I think you also got to make it to where there's an expectation on their side that you're just not available all the time. Like I can't just be available every minute of my day to calm your nerves. And if you can't come into this understanding that it's going to take time, then we shouldn't work together once again, right? Like that's where you're really setting the expectation with them. But I think, yeah, we do monthly meetings with our owners. We'll give them feedback. We give them projections that are not just within the post away our platform. Like we literally give them a deck that's our information of what we think the reviews. Here's some things that we've seen that have come up many times that we recommend fixing. And 99% of the time, Sebastian, our owners are just like, yeah, do it. Yeah, like go for it. We trust you. Because once again, they understand we typically deal with people who own real estate already that I'm not typically, we just took on a new client who just bought a new property. So we'll see how this goes. Like, but usually I work with just people who have 30, 40, 60, 300 units already, and they're looking to convert some of these units. So they look at it more operationally, which I think for us, when we look at our archetype of our perfect client, that's who our perfect client is, because they also understand from an operator level that they're willing to give more time. Like they're not so knee-jerky reactionary. They're willing to allow it to marinate for a while to really then make a logical decision. So, but yeah, we do the monthly meetings. Obviously, our team will also call them just on a check-in basis to see how they're doing. Like my partner calls all of our current customers just to see how they're doing, like strictly not even business-wise, like just continuing to nurture that relationship. Because once again, like, hey, you happy? Like, how's it going? Like, how's your wife? Like, what's going on? How's your husband? You've gone skiing with kids? Because ultimately, once again, our highest goal is to get them to want to invest with us, right? So if we're continuing to build that relationship, that's not just on business, right? They're going to continue to look to us when there's opportunity for them to want to invest some capital to do another deal, right? So that's where I think we're a little bit different, is like, the short-term management and like the long-term management, like I said, is really like we get them addicted. You get them addicted to like the return, and that they don't have to do anything, right? And then it's not that it's the same thing if they were to own a building with me, because they're a limited partner. They're not managing, they're not owning, they're just getting their payout, right? Like, so they're already conditioned to the idea that, okay, well, he's already does it this way. It's the same way over here, and you can easily slide them over to that because they're comfortable at that level to see how you've managed. So they know you're already taking care of it, where they're like, why not just let him do everything which he's already been doing anyway? I mean, we literally do everything outside of doing their books for them. That's one thing I don't do, is I won't do their books for them, just because like I don't know what else they got going on or what that looks like. And quite frankly, like that's why we don't do trust accounting either, because I don't want to touch their money. I want that money to go to them, and we just bill them back for the services for cleanings and all that stuff. So, yeah.
Nic, tell me how your role has evolved with time as you've sort of scaled the portfolio.
Yeah.
What has that looked like in terms of the transition that you had to make? When you're starting out, you have to do everything, and then as you start to have more of a team and whatnot, you might start to question, is this the best use of my time? Where should I be focusing?
So to answer your question, like on when it comes to like my role, like when you first start, right, like you feel guilty if you're not doing everything. So like when I started, I was doing everything because I'm like, this is what it is to be a business owner. You got to do everything. Like my father was a small business owner. Like he did everything for years. But then I have a coach, I have a business coach, had one for 4 years, which is probably something I should have mentioned in the beginning. It's one of the biggest pieces of key success is having an outside person who's not within your business, who really kind of can shape you, right? And say, hey, like, this is what you're telling me you're frustrated with. Let's work through it, rather than making it an 8,000-pound elephant, which we all do as business owners. We make everything such a big deal when it's probably not that big of a deal. So as I started, right, doing everything, and then as you grow the business, you have to start looking at things of like, is this something that I should be touching? Like, is this something that I should be really Like I built the business where the team has an understanding of the vision and they know what I want and they know what it looks like. And you feel kind of guilty that you're not there helping do everything, but ultimately it's your job now to allow your team to grow and to put people in the right places to help you grow. Like we have a guy on our team that's been with us for 3 years who has worked every single job. He knows more about the business than I do. Like my clients understand, so you need something, don't come to Nick, you go to him because Nick's not involved, right? And that's in like the day to day. So now my shift of focus has been more so, how do I continue to get more clients into the business, more units, acquire more units, raise more money. So the reason why most companies don't get to $10 million in revenue is because the guy that's selling stops selling, the CEO or the girl, but they stop producing more revenue, right? And so my job is to just focus on continually to build more revenue that's bringing into the door, whether that's doors under management from a manager side or assets that we own. And I now have a partner that his job is to help me hold that units, that revenue down, like build up the teams, have structure, right? Like everyone needs their own role. Like when I first started, everybody was doing everything. We had to really kind of silo everybody into different roles so everybody understands where their functionality works. So over time, it's come from where I was doing everything to where now I will only want to focus on 3-4 things a day of 3-4 hours worth a day of stuff, because I'm going to do it at a higher level of quality than if I was doing 30 different things and still trying to get those things done, if that makes sense. So my day-to-day now is strictly focusing on developing the front end of the relationship, selling new clients, either on, not even selling, it's more so just like seeing if we can co-create together. Hey, like you got this going on, I got this going on. Can we work together? Great. Let's figure out how now, if that's buying an asset or if that's managing an asset for them, if it makes sense strategically for both of us. Right. And that's my real role now on the day-to-day side. But it's funny because you see these small business owners I'm still technically a small business. And when I see other owners that are out there, like it cracks me up because I'm like, they're doing everything. And they're like, oh, I'm sweeping the floors. I mean, is that really worth your time? Like you should be off building more revenue or building whatever else. Your job is to be working on the business, not in the business. That's why you hire employees to help you do that, right? And so that's probably been the biggest thing I've had to learn over the last 2 years is how do I walk myself out of these things, hire good talent to be able to build that out for me. We grow it because ultimately, like I'm only as good as my weakest employee, right? Like, so how can we get them to be at a place where it kind of turns the table, right? Where when you first start, you're focusing just on yourself and what it produces for you. And then over time, as the business grows and revenue starts to grow, we got to start looking at it from a kind of what I call like a servant leadership mindset, where it's like, my job is to help you as employees do your job better, because the problems that we're struggling with now are far above where I was at when I was doing your job. So I can only give you what I think is the best thing for us to do, but I have to put that monkey back on their back and say, hey, what do you think we should do?
That is crucial. And it's a big transition, and I think there's even a book that's called like going from what to who, I believe it's called.
Yeah. So we use it all the time. We use it all the time. It's saying it's like it's not about who, it's not about how, it's about who. So it's not about how, it's about how to get something done. It's not how to do the books. It's about who can help you get it done, right? And so all my job and my partner's job is to make sure that the people that are the who are able to get that how done at a high level. Like that's what we're here to do now. We're not here to do anything other than that. My job is not to be in there with the clients. And it's hard too, because you have clients that are your friends that are like, Nick doesn't answer my phone calls anymore about this stuff, or he pawns me off to his employees and they get frustrated, right? And it's like, dude, I maybe could have communicated that better probably, but like you got to be able to kind of restructure everybody's mind that you need your team to help you, because that's what makes what you have so great. It's not just me. It's an ecosystem of what we've created and we co-created between my employees and all of that stuff, which I think when you talk about a unique company, that's why people come to want to work with us, because they see what we've created in the talented people that we have on the team and what they're doing. And I mean, we have people in Venezuela and Colombia that are able to asset manage units in America at a high level, probably better than they can do it themselves, right? And so that's some real unique teamwork that you just don't find on a lot of other organizations, especially in the PM space, as you're aware, especially in long-term rental space. You have a 60-year-old lady who's just hanging out there managing 200 units, who has no other concept of technology, and they're taking photos with their iPhone to rent a unit. It's just mind blowing. And that's still how business gets done here in the US, because that's how it's been getting done for the last 60 years. You know, it's wild. It's wild. So, but yeah.
And you mentioned that you had a business coach. I'm curious to know what you think has been the impact on of that accountability or just external advice, and what would you say are some of the main lessons or takeaways that business coach might have shared with you?
I would say, like, being an entrepreneur, right, is a very lonely path. There's a path of loneliness. You have this level of like not really knowing what to do all the time, as well as you're in a place where you're playing with shapes and you don't know where the shapes go yet. And to be able to figure that out, you have to really work through those problems, and it can get very defeating because you constantly are going through this battle of like, I failed here, I failed here, I failed here, I failed here. And a good coach is going to be able to say, hey, like, yeah, you failed. And they're not giving you what I would call like ego manipulation or confidence manipulation, where they're telling you, oh, you're the best, you're going to figure it out. And like, no, you suck. And that's okay. Like, you're just working through it, dude. Like, it's not a big fucking deal. Like, you'll get through it. Just be patient and like keep working. Like my coach always says, the reason why companies fail is because people stop trying. They give up. It's not because they can't make money. It's because they stop trying to figure it out, and they don't care anymore. And they just say, I'm done. I don't want to do it no more. It's why all these owners that do short-term rental, they never made it a company. It was always a hobby. When they don't really understand that level has changed now with competition in the market and what that looks like. So, I would say that's the biggest piece of the number one thing that's given me is that ability to fail quickly, move on, and realize that we're all in the same boat. We're just in a little bit different places at a time.
And that's like, to your point on the reason a business will fail is because they stop trying. I mean, when you think about it, and I think there's a book, The Infinite Game by Simon Sinek, which talks about this, which is like, in business, like contrary to sports, where you have definite rules and there's a start and there's an end. Like in business, as long as you keep playing, the game is not over.
Correct. Yeah.
Right.
Yeah.
So it's a different mindset.
It's a completely different mindset. I just think that a lot of people, when they get into business, think it's going to be so easy. And like, I've been doing this for 5 years, and it's taken me 5 years to start where I can start seeing some significant money coming out of my company, where I'm like, wow, like, I look at what I built. Like, it's like, look at what we did. Look at what we started with nothing, and look at how far we came. And it's one of those things where the easy thing to do is to give up, right? And the hard thing, and the crazy thing about being coach, right, is that 9 times out of 10, Sebastian, you have the answer. It's just, are you willing to see it? And so having a coach there to kind of say to you, like, put the mirror in your face and be that man. He's a man, he's a guy, so I call him the man in the mirror. He's able to flip that towards me and say, Nick, like, what you're saying is this. So let's go get it then, and let's put in steps for how are you going to get it. And so we do a lot of like role rehearsing, where it's like, hey, like, this is what I want to do. This is how I'm going to go and attack it. All right, I'll talk to you next week. And by next week, I've either got it done, or we're continuing to work down that path of getting that stuff done. And it's just one of those things that, especially with social media in the United States and people's mindset, is they have an outside perspective of how easy it is to do business. And business is extremely difficult, because a lot of these things you're not taught. Like, you're not taught. Maybe you are in business school, you're taught how to do stuff with how to run a business, but you're really not taught how to run a business. You're taught how to like look at it and evaluate its health. But when you have nothing and you don't have any revenue, where do you start? You got to start making magic, right? And so, and to go back to the very beginning question you asked me about how do I find my partners, is I'm a firm believer that if you're putting that energy out in the world of what you're trying to do, the doors are always there. You just got to be willing to look for them. Right. And so my partners found me, not because like I was right time, right place, luck, whatever, but I was ready for that moment and I was willing to take that opportunity. Right. And so When entrepreneurs are starting, I think a lot of times they get so stuck in the mindset of, I'm going to only do it this way. And this is how it's going to be done. And it's going to change 1,000 times. And that's okay. There's nothing wrong with that. As long as you when you first start, at least you're going to do a lot of different shit. And we did a lot of different shit. And then as we started to realize, as I got older in my business and getting to understand, I was like, we need to get more detailed, more niche. We're only going to do these two things. Anything outside of that, it's noise. I'm not going to even look at it. It's just noise. We're going to stay within that zone. And that's what we've seen over the last 2 years. Our business really started to take off is because we just focused on the big doors swing around little hinges, Sebastian. So we focused on those little things that made the big door finally open. And I think that's what a lot of businesses get stuck with in the beginning is you get like this googly eyes of like, look at all this world that I can play in and what I can do. And I can do short-term rental management and arbitrage and this and that and this and that. And then do the cleanings and like all this different stuff. And then they grow too fast and they're not able to hold down the business that's there. And I think that's where you really get to a place as a business owner where you're at a strategic level where you're thinking for the business. Where you're like, hey, like that just doesn't make sense right now. Like, yeah, I think it's a great idea. Like we're paying our cleaners almost 20 grand a month right now across the country. That's like, I would love to take back that revenue. And we start a cleaning company, but do I want to manage that many fucking cleanings? No, I don't. Like I want another vendor to handle that. Like that sounds like a headache. 3 years ago, me would have been like, no, we're doing it. We're going to take that money and we're going to figure it out, which like, is that the right move? Maybe there's another way of doing it. Maybe we partner, maybe we bring in a cleaning company, we get a little bit of their equity of their business because we're giving them $250,000 a year. It's smaller that can help them grow and we could build their systems without having to take on the big labor uplift.
And Nic, when you look ahead, okay, so you've got a very good foundation, both in terms of skill set, experience, the properties you're managing, the team. What's ahead? Like you mentioned, you don't necessarily want to become the largest out there number of properties wise, which it makes a lot of sense. That shouldn't be a goal in and of itself. How do you think about the goals and where you want to see yourself, let's say 3 to 5 years down the line?
Yeah, I think our goals has always been the same. It's to continue to acquire more assets, right? And so that asset class to us has gotten very defined of what we're looking at. And so we really focus in on the long-term side of lower income housing, Section 8 government housing, especially everything that's going on right now in America with inflation. People are getting poorer, and that's just the reality. And so our thing is, how can we come into those communities, take these assets that need a lot of love, turn them, bring in technology that we're using from the short-term rental side for Wi-Fi and all the cameras to not only make the place a better community, but also make it a very, very profitable asset, right? And so ultimately for us, that's what we're continuing to do is we'd like to acquire one more building this year. We've acquired already 2 buildings this year on that side and then continue that arc. And the short-term rental side will be something that we will continue to do until we get to a place where it's like, hey, is this something that we want to move forward with more? And especially when it comes to the long-term and the short-term side is so much more intense as far as your time and the staff that you need involved with it. And it's something that, although we enjoy doing, I don't see myself doing it for the next 5 years. We're going to continue to become a larger asset management company. I'd like to do what I did in 5 years, which is require about 15 to 17, probably $18 million worth of assets. In 5 years, I'd like to do that within a 2 year, year and a half period of time. And because we're ready to scale there, because we've already kind of built that out. So
now with what you know today about the differences between those different asset classes, like what do you need to see for you to be willing to, like from a deal perspective, like what do you need to see for you to say it's worth the additional hassle that I know having this short-term rental is going to represent? I'm still acquiring it.
Yeah. I think I look at the short-term rental model as it could potentially become a hybrid where you're buying units that you have a unit where you're doing half long-term, half short-term, which we've tested that model. It works really, really well on buildings that have smaller units where you're not able to get the higher long-term rents because they're small, right? And so that is an idea that we've continued to kick around where I would say, hey, that's something that I'd be willing to do, like a conversion of a motel where they've already converted them. There's some 1 bedrooms, maybe some studios, and you make the studios especially right now, like as I'm sure as you're aware, like the travel market, although people are still traveling, spending money, they're not really spending money when it comes to larger units. I think the ADRs have gone significantly down in some of these bigger units, is from what I could tell. And we've seen that on our stuff. So the units that are performing the best right now are the smaller size of units, like the studios, the one bedrooms that are in the 2 and 4 size travel size. So that's what I would continue to do, is those kind of ones. Going and doing a 7,000, 8,000 square foot home that is in a very hot destination for travel, like to me, it's a lot of risk. And typically I advise our clients to stay within the 2 to 4 bedrooms, people size units, because if there is something to happen that changes in the market with regulation that we can't control or whatever, you're able to flex extremely quickly back to something else, or midterm, which you're not able to do with a larger unit. Let's say you go buy a $2 million home on the water, and they say next month, they say, well, no, I know you've been making 20 grand, 30 grand a month, a regulation, you're done. It's happened. And I've had it happen to friends of mine in Las Vegas and different places. It's happened to me in Las Vegas. And unfortunately, you can't control those things. So I think from a deal perspective, it would have to be a deal where I would rather take a deal that is not as sexy as a property that's maybe in a more urban area, as far as like it's a secondary, tertiary market. I mean, it's not like the hottest market in that state or that area, because those properties perform the best because the competition is lower. So like we can go into a city like Columbia, South Carolina, or an Anderson, South Carolina, or a Fallon, Nevada, which are all smaller, under 200,000 cities, and perform better because there's 5 units in that market. So it's like I can perform better, and my return's higher, and I have less out on money. So I think everyone's looking for home runs, right, with Airbnb, because they've solved this years ago where everyone was making so much money. But those days are gone. Those days are long gone, in my opinion, especially in the US with regulation coming down and everybody really clamping as far as cities. Like, you got to go to places where the regulation's looser, and you have the opportunity to recoup your capital that you're going to put into that.
And I think the biggest, and at least for me, the biggest aspect of what you're mentioning is the risk mitigation component.
Yeah.
Like, it's funny because I've literally had people on the show that are on 2 extremes of this in terms of like schools of thought. There's those that kind of like you, and I personally, I think I share that belief of like, might as well be safe, might as well be safe, and worst case you won't go bankrupt. Like, in worst case you can service your debt because you can put this as a midterm rental, as a long-term rental, or whatever. Then there's those that are like, okay, I believe in this, I want to go all in, I still want to go with a 5-bedroom, 6-bedroom, the big property. And it's, I mean, there's pros and cons, right? But the pro is, well, yes, probably they'll, like, from a gross booking value perspective, they're probably going to gross more as long as everything goes as planned.
But let's look at their net, though. That's the thing, is that you got to look at what they're really making, because those bigger properties have higher utilities, they have everything, right? And like, I also think a lot of people that are in the short, and I don't mean to cut you off, but a lot of people that are in the short-term rental space, Sebastian, are not they don't operate in other asset classes. They just do short-term rentals. So they don't have an understanding of what's happened in the markets over time. Like, you look at some of these buildings that used to be motels that have now shifted to these now what we call like efficiency style units, or like studio 1-bedrooms. And like, that is a great model for an Airbnb operator who could come in, operate that building like it should be, but now a boutique hotel or motel that can also flex to do midterm or long-term as well. And I think that's why, like, with when I tell people, like, do you do commercial, like industrial and that stuff? I'm like, no, like, I just put heads in beds, because I know how to do long-term. I know how to do government agency stuff, all the way to high-end long-term stuff, all the way to short-term to high-end short-term. Because if something was to happen, my investors, I know I can get them out of that asset, because we've already planned for the what if. And my concern is, like I was saying earlier, a lot of these operators don't understand really what they're operating. They don't get it. They just look at the pro forma, they do their numbers, and they say, oh, it's a good deal, let's buy it. So it's just one of those things. But yeah, I think the school of thought is, you're right, is you got to be in a place where we're being conscious of the reality that the market that we're in. The markets are volatile, shit changes. And if I can't control regulation, why the fuck would I go do that? Like, that puts you in such a massive risk. And Sure, make your money good while you can, but you won't last. That company won't last. It won't. Unfortunately, it just won't. And that's just
Hmm.
reality.
Yeah, no, real talk, man. Real talk. I love it.
Like think
Well,
about it, like
listen.
I started out wholesaling, and this shit has completely changed. There's no texting allowed anymore. Most states have no longer allowed wholesaling. They're banning wholesaling. You can't do a signing anymore in some states. Like you got to double close. Like the game is changing, and if you stick to something that never really has changed and it stays the same always, like industrial and office. Look at office space right now, how that's completely imploding, right? And like that's why I like heads and beds. It may not be the highest grossing or the highest opportunity when you look at IRR and all that other fancy names that these people put on it, but it's always been there. People always need a place to sleep. And like if you can get creative with Airbnb and you can that's part of your tool belt, then that's a great opportunity to raise revenue and try it and see if it works without exposing yourself to say, oh, well, I can't pay the mortgage now. Take it.
Yeah, yeah,
So
yeah. And I think that if you reframe the goal of business as surviving, like it sounds silly, but it is true. Like you can only grow if you exist, right? So and there's so much attention in the business world on growth, growth, growth. It's like or sales, 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 revenue, revenue, revenue. But it's like survive. Like make
yeah,
sure you're gonna be in business
in
still
10 years.
5, 10 years
Because
down the line.
those are the people that make the most money is they've been around long enough. They've been able to go through the waves and change and say, okay, because they haven't hitched their horse to one, they haven't hitched themselves to one horse. They haven't said, okay, boy, that works out. Then that's going to be the one that's going to make it for me. And that's where I think a lot of these arbitrage guys, like I really worry about those guys because I'm like, dude, like right now it's got to be brutal for you. Like you're barely making meat. You got the landlord bumping your rent. Like it's nonstop. So, but I got to wrap this up. I got to take my buddy to the airport
Yeah, let's go,
but
man. Thanks for the
I
time.
appreciate it.
It was
Yeah.
great to have you on, and let's stay in touch, man.
Yeah.